Greetings, everyone, and thank you for coming to my channel. My name is Jeremy Dancer, and I am a Forex coach, Forex trader, and true believer in the law of attraction. If you want to learn more about Forex, please join my private group where I share signals and help you prepare for the week ahead. And for those of you interested in Galileo, I do have the best deal possible for the Galileo Forex bot. So please let me know. And on top of that, I am the only person that I know that has a public account for trade verification. I know there's been a lot of people out there that don't believe Galileo works, or they don't think anyone's really using it. Well, I have an account specifically for Galileo that proves just how amazing this bot works, but you need my program to make it work correctly. From what I can tell, no one really knows how to use this bot. I'm an expert trader and an expert with Galileo, so I find it's very awesome once you understand how it works. So please let me know if you're interested. Okay, so let's get into this. Fed Chairman Powell testified yesterday on July 10th that he hasn't met with President Biden in over 2 years, which raises concerns over how Biden is working to get inflation and the labor market under control. Despite tremendous pressure to start cutting rates, Chairman Powell is not only concerned with inflation, but what that might do to the labor market before he starts cutting rates. So lowering rates too fast may cause inflation to rise higher, while doing nothing or raising rates may hurt the labor market. Currently, it seems like inflation is going down, so the Fed feels comfortable doing nothing, which of course is a problem as many Americans still struggle with high rents, mortgages, and also high prices. So you would think that President Biden would be working with Chairman Powell to see if they can come up with some way to make this happen. So the fact that they haven't met in over 2 years is quite alarming, and it did create some chaos at the time when Chairman Powell was testifying. So the main question is, what data is Chairman Powell going based off of to determine that he's confident enough to start lowering rates? Chairman Powell wants to see a steady path to 2% PCE inflation, not necessarily the inflation at 2%. So, a lot of people are kind of confused about this because many people believe inflation is close enough to 2% to start cutting rates now, but not Chairman Powell. This could be a sign there is something far worse he is seeing in the labor market that we don't know about yet. On this chart, you can see that inflation was at 2% for May and was also at 2% for June. It looks like things are on the right track in regards to inflation. What I also find alarming is that unemployment has been on a steady rise uh, ever since the year started. At the same time, we also see inflation remains high. So there's a lot of weird things going on that just aren't adding up. Because if you have rising unemployment, in theory, you should have inflation start to drop down because people shouldn't be spending as much money. So if you look at this unemployment chart, what you'll see is that it has been on a steady rise. And on top of that, if we're not careful, we can be looking at unemployment rates back in 2008 if this keeps going the way it is. And it couldn't happen at a more worse time for Biden's campaign. All right. Now, the next thing to look at is this chart, which measures consumer debt. We can see that inflation is remaining high, not because Americans have so much money to spend, but because Americans are using debt to keep up with the high prices. And this feels like a recipe for disaster. If this so-called great US economy we have is propped up by debt, then you can kind of see where this is going and is not going anywhere good. Which brings me to the US dollar Japanese yen. This is a very important currency that everyone should be paying attention to. Even if you're not trading it as index traders, equity traders, if you trade stocks, you need to understand the relationship between the US dollar, Japanese yen, and the S&P 500. And when it comes to the Dow Jones, there's like maybe like a 50% correlation there, but it's still very important to understand. Um, so on this chart right here, you can kind of see what that correlation looks like. So there's many times you can get trade ideas for the US dollar Japanese yen um, when you follow the S&P 500 and also vice versa. There is also a much bigger problem at hand too. If the catalyst that is giving the stock market record gains is pumped up by debt that Americans can't pay, there will be a collapse at some point, and the market will always correct itself. So when we look at the US dollar, Japanese yen, and we see how high it is today, even though it did have a nice little crash today after the inflation reports, which was kind of good. Uh, is still extremely high. What I'm seeing with the US dollar Japanese yen is that it should be in like the low 150s range. Okay. But so it's still very high, and that's mainly because the stock market is still doing very well. Something else that's also very important to understand is the role that inflation plays on the market. High inflation tends to drive interest rates higher, which hurts the S&P 500 and in return causes the US dollar Japanese yen to fall. At the same time, inflation is great for the US dollar. So there are situations where you might see a strong US dollar, but the US dollar Japanese yen tends to fall. This is important information because when you follow inflation reports and you are making your analysis, especially if you're trading the US dollar or Japanese yen, what you're looking for is better than expected inflation reports when you're shorting, and then if you're going to be buy or be long, you're looking for lower than expected inflation reports on the US dollar Japanese yen. So inflation reports are very significant when it comes to trading. And there's also cycles involved when it comes to these inflation reports. So let's think about this for a second regarding the current cycle we are in. We have already seen a peak in inflation, and it looks like the 2% inflation is the new normal. When inflation is normalized, the S&P 500 tends to make double-digit gains, which explains why the stock market is doing so well, and the US dollar Japanese yen is also making record gains. So what's next in this cycle, or what's the next cycle? The next cycle is for something to break the normalization. And I believe that the rising unemployment is going to be that catalyst that eventually breaks what is happening with these record gains in the stock market and the US dollar Japanese yen. I know so many times Japan's finance monetary department is always coming out saying that they're going to intervene if the US dollar Japanese yen keeps on getting too high. But really, all they have to do is be patient enough, especially as the US unemployment keeps on rising, the debt and delinquencies on our debt keeps on rising. Eventually, what's going to happen is the stock market is going to have its own hits anyway. And that's kind of going to correct what is happening with the US dollar Japanese yen. because for the most part, the reason why Japan has no idea what's going on with their currency and why it is falling so much is because the stock market is super inflated right now. The prices, the gains that the stock market is making isn't making any sense. So unfortunately, a lot of things in the markets is not making sense either. For these reasons, I believe the US dollar Japanese yen is at a tipping point, and it's only a matter of time before we see a massive fall. This, of course, is at the worst possible time for President Biden, who is firmly staying in the race, and I quote, he is planning on staying in until the Almighty God tells him he's done. So in many ways, Powell not doing, or Chairman Powell not doing anything is severely damaging Biden's campaign. But on a scarier note, if Chairman Powell can't do anything, that is far worse and potentially setting up for Trump to have a major win, which of course is going to be a disaster if that happens. So I hope the markets get it together. I hope the Biden campaign get it together, the Democrats and everything else going on, because we're headed into a financial crisis in the US, and I don't think a lot of people see what is happening. Fortunately for us as Forex traders, we pay attention to this kind of stuff and we stay on top of it. And if we're doing our part, we also profit from it as well. Okay, if you like this video, please like it. And I hope to see you in my private group if you're interested in Forex. And make sure you subscribe to my channel if you haven't already. And if you have, thanks once again. Thank you for watching this video, and I appreciate all of you. Have a great day, everyone. Take care.